Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to have a look at our W3 or Wave 3 trade setup with a lovely example on the 3-minute ES from yesterday. But as usual, we start with our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and trading purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. No matter what trading approach you take, there always will be losing trades. Right, this is a 3-minute chart of the ES using our standalone MTPredictor version. We're plotting using the RTH, or the regular trading hours, which are from 9:30 to 16:15 New York time. So the trade setup I'd like to look at is this TS1 W3 trade setup. As you can see, it turned out very nicely indeed. So what is a W3 trade setup? Well, a W3 trade setup is where if I place our major pivots on, it's where the market has made a low, it then made an initial rally up, which would be wave 1. It then makes an initial correction down, which would be wave 2. It then makes a strong rally up, which would be wave 3. So if I right mouse click here and do Elliott wave major, you can see this is what we're looking at. We're looking at a wave 1, a wave 2 and a wave 3. So what we're looking to do is capture the wave 3 swing. Why do we like this? Well, wave 3s are normally the strongest and longest in a completed 5-wave sequence, and therefore represent the largest profit potential in relation to the smallest initial risk. We also know that in a wave 2, if I right mouse click here and do Elliott wave minor, a wave 2 typically subdivides into an A, B, C, and you can see that that's what it did. It did an A, B, C down into the wave 2 low to then set up our W3 or wave 3 trade setup. So that's what the basis of the wave 3 trade setup is. Now the problem with most standard Elliott wave, just take those connected pivots off of the major. The trouble with most standard Elliott wave is that because they assume that markets are predictable 100% of the time, Elliott wave patterns get into trouble. So what we do at MTPredictor, and have done for many decades now, is we use Elliott wave in isolation. In other words, we assume that markets are random about 50% of the time. That's when Elliott wave patterns get into trouble. So we only look to trade when the market pattern is clear. So of course the question arises, how do we know when to start our Elliott wave pattern? Well, this is when we go to the higher time frame chart. So on a 3-minute chart, you go out to the 15-minute chart. It's a time frame between 3 and 5 time frames higher. So if you're on the a daily chart, you'd go out to the weekly. If you say trading Forex on, say, an hourly chart, you'd go out to probably the 4-hourly chart. What we do, if we go back in time to before yesterday's low even unfolded, in fact actually before yesterday unfolded at all, before yesterday even started, what we do is we use prior pivot swing highs and lows. There's the previous low on the previous day. We then place our DPs on the chart. You can see here we had our typical DP and our maximum. The typical, as it says, is typically where markets make a reversal if a reversal is happening. Sometimes these are exceeded. If they're exceeded, the market then very often makes its reversal at the maximum. So if I exit replay mode, you can see what happened yesterday. The market went down, it went just through the typical, snapped back again, but it actually made the low of the day right in the maximum DP on the 15-minute chart. So if I just take off the typical, you can see how that caught the low beautifully. So what does that mean on a 3-minute chart? Well, if we go back to the 3-minute chart, this is what it looks like. Can you see there? There's our 15-minute DP level, catching the low nicely. So what we do is we then draw a line in the sand here and say, right, if the market is then reversing off a projected level, in other words, if it's doing what we anticipate, therefore we deem the patterns clear. If we deem the patterns clear, we then start our Elliott wave sequence at that point. So do you see what we're looking at? The market made a reversal at our anticipated level. That's where we start the sequence. Therefore, the initial rally will be wave 1, wave 2, up to wave 3. So that's why we start to look for these W3 trade setups after the market has made this higher time frame reversal. Our MTP trend helped confirm this by going from grey You see it showed you in the process of making reversal to blue. Do you see it was blue here to show you the large degree trend was up? So if we right mouse click over this blue buy bar and do our analysis, you can see this sets up our trade. We use position sizing, so I'll just change that to our default account, which is 2% risk on a sample $20,000 account. That will allow you to go long 2 contracts for an initial risk of $400, ignoring slippage and commission. The target would be the typical wave 3 WPT. So this would be our target, because remember we're looking to trade the wave 3. So this would be the area we look to taking your profit. And as you can see, the market rallied up here nicely, where a profit was just over 7 times the initial risk was available. For those of you with a keen eye, will see that this wave 3 here, subdivided, if I right mouse click at this bar, I do edit wave intermediate, can you see how it's subdivided into a 5-wave sequence as well? 1, 2, 3, 4, 5, with the high here right at the minimum wave 5 WPT. So this gave you extra confidence to look to come out at that particular level. So I'll just place the analysis back on again. And as you can see, the two coincided beautifully at that level there. So that would be a good point to come out. Also just before close. So as you can see, this was a very nice trade setup indeed, that not only allowed you to keep the initial risk small, because losses can and will and do unfold, make no mistake about it. This is not a trade setup that has a high probability of working out. No trade setups do. But what it does is when the losses come through, and they will come through no matter what trading approach you take, the losses are kept small, or what we call one risk unit. But what we're looking to do is, because we're trading the wave 3, which is typically the strongest and longest in a completed 5-wave sequence, this allows the profit to be large, not just in dollars, but in risk reward units. So this is what you should be looking for in a trading approach, where your profits have large risk reward units. You can see here the profit was 7 times greater than the initial risk. This is what you're looking to find in your own trading setups. So hopefully this has been a good example to show how not only were we anticipating the larger area of support, as you can see there's our 15-minute DP coming in there, but how that then allowed us on the shorter time frame to then draw the line in the sand to start our Elliott wave sequence, to then be able to look for the initial rally, which is wave 1, an ABC correction down into the wave 2, that then set up our trade setup to then be able to trade the wave 3. And as you can see, this has come out to be well, pretty much a perfect example really, and a great example of our W3 or wave 3 trade setup in MTPredictor. This setup is also available in our NinjaTrader add-ons, as well as our TradingView scripts as well, so not just our standalone version that I'm using here.